Hello, I'm Debbie Bell-Hosking for FinextraTV, and I'm joined by Ioan Iacob of FlowX.AI, and we're talking about AI adoption within financial services. So Ioan, welcome to our Finextra studio.
Well, thank you, Debbie, for inviting me.
The key is in the title, AI adoption within financial services. We see a huge growth in this area. But my question to you is, are we seeing the successes to match?
Well, definitely, and I think 2025 has picked up in a very different way than 2024. I feel 2024 was a bit of an exploratory year for companies, for financial institutions in this space. But 2025, it feels like people are truly starting to bring in AI in a pretty spectacular way, and we're seeing our customers that have been deploying AI agents and AI capabilities now starting to actually scale those initiatives and scale those deployments. Now, at the same time, and I think this is actually something that everybody's talking about, it's the MIT study that 95% of AI initiatives fail in the enterprise. Unfortunately, we're meeting also a ton of customers that have been burned by that. And the reason is POCs are, let's be honest, POCs are easy. POCs, demos, slides, they're all easy. The challenges appear when you're actually trying to put something into production. And the reality is it's not a problem of AI or of technology, of AI technology. The problem is pretty much everything else in a way. And let me explain what I mean by that. So you can build very, very quickly AI agents today, and there's a number of ways you can do that. But then the challenges appear when you want to integrate that with your existing data and existing systems, when you want to integrate, when you want to embed those agents into your existing applications, whether customer-facing or front office applications or back office applications. The challenges appear when you want to have governance and scalability and robustness and data privacy. So really, AI-specific development is just a very, very small part of the story in deploying AI successfully, especially in financial services. I think one of our founders actually is using this metaphor quite a lot. Which is thinking about how the American West was conquered. And yes, there was the technological innovation, that was the steam engine, but the truth is it was railroads that were essential for taking the steam engine to all the corners of the country. And in a very similar way, enterprise needs rails in order to take AI agents to production and scale it. And those rails are integrating with existing systems. And here, of course, you have, from APIs all the way to mainframes, and providing governance and auditability and traceability and providing data privacy and data controls. Like all those things are actually the hard thing about enterprise AI. It's like it's the Pink Flloyd, you can't have your pudding if you don't eat your meat. And I think everybody gets very excited about AI and wants to do the cool thing that is, AI related. But the truth is you really have to eat your meat before you get to your pudding. So, doing the maybe less exciting stuff, that's actually providing that robust foundation for deploying AI in financial services. That's one of the, what I feel is one of the big topics.
And that was the word I was thinking of, foundation. You've just said it, robust foundation. So where does Agentic AI fit in terms of the building blocks on top of this foundation? Because we hear a lot of talk about Agentic AI. We are talking, you and I, about financial services. Do you think the industry is ready for that level of autonomy within AI?
Well, I think it's thinking about autonomy right now. I'm not sure it's really worth thinking about full autonomy at this point. I'm not sure the Organizations are ready. I'm not sure regulation is ready for that. But what we're seeing our customers doing with a lot of success is bringing in semi-autonomous agents with what we're calling not just human in the loop, but human in control. So every output of the agent goes through a human hand and is reviewed by a person. So let me maybe give you an example. For one of the agents in our agentic banking suite is an agent that does company appraisals for commercial lending purposes. And that agent goes out in the world and builds a thesis about the industry, about the markets, about the specific geographies that the company operates in. It goes out to governmental and public databases and retrieves information that's available from those databases. It goes out and does a web search, but then it also ingests a large number of documents, things like balance sheets and P&Ls, but also shareholder agreements and many other types of documents. And then what it does, it provides a recommendation based on all the information that it has acquired. It provides an explainable recommendation to the human underwriter. Now, the interesting thing about that is this is something a human could actually never do, because it doesn't have the ability to cross-check information from 20 different documents of maybe 40, 50 pages each. And it doesn't have the time to go out and do all that research. No, independent of the expertise of that person, it's just not economically viable to do that. And imagine this agent is not only providing that in an explainable format, but it does so without any hallucinations, and most of the times it can do it in under a minute. The ability to increase the quality of outputs in these processes directly affects what's really at the heart of the financial services industry, which is managing risk. Because you directly impact the risk that you're exposing the company to, the firm to. And sometimes you're even taking risks off the table, but most of the time you're dramatically reducing that risk. And I think this is really where the opportunity is, in particular for financial services, to deploy agentic. And what I want to propose to you is that not a long time from now, without agentic, the financial institutions that are not going to adopt agentic capabilities are going to be completely outcompeted in the market, because they're just not going to be able to manage risks at the level that the ones that are adopting agentic are. And I think there's a lot of conversation about, should we trust AI? I believe that's the wrong topic. I believe the topic is, should we trust processes without AI?
You spoke earlier about being able to stop hallucinations. Is that really possible?
Well, yes, and with our new generation of technology, with the version 5 of the FlowX.AI platform, we're doing that very successfully. We're calling it a near zero hallucination technology, and the way we achieve that is by bringing together a number of techniques that we have been using in the past. Things like very strict retrieval augmented generation, things like chain of thought reasoning, things like self-reflection, but also we're limiting the search space by providing our own financial services classifier model on top of LLMs. So there is a very thick layer of machine learning that sits within FlowX.AI on top of LLMs, and we are again very excited and very proud of the fact that we can plug into any existing LLM, any of the existing LLMs, and extract more or less similar results, maybe with varying speeds for varying types of tasks. But we take a lot of pride in the accuracy and in the quality of responses that our FlowX.AI agents are providing. I mean, we've been building for almost the past 15 years, definitely for the past decade. We've been investing in building AI for enterprise and for mission critical systems, and these kind of topics have been top of mind for us for a very long time.
What does the future look like for them? Can there be optimism in terms of adopting this technology that you feel is absolutely important for the future?
Very short answer, absolutely. Maybe a bit of a longer answer now. I think there's two types of legacy that we should distinguish between. One type of legacy is about technology that's been created maybe way before the digital era and architected before the digital era. But those are robust systems that have been serving financial institutions for many decades now, and with a lot of robustness. By the way, I think mainframes are a big part of that conversation. We're bringing up legacy, and I believe that's wrong. We don't see mainframes as legacy technology. If anything, IBM is constantly releasing every couple of years new mainframe generations. I believe that technology is absolutely impressive for being able to process literally trillions and trillions, tens of trillions in transactions daily for financial institutions. And I feel that, yes, they're not created for digital channels, and they're not created for AI agents. And this is where I believe bringing a layer, an intelligent layer on top of that, is actually a massive advantage. And that type of quote-unquote legacy that a lot of financial institutions have is actually a huge advantage, because they've been accumulating data for, again, many decades, and that is an incredible value to them. Now, there's another type of legacy where we're talking about patchworks, and we're talking about badly built systems that are caught up in literally a spider web of integrations, and the type of legacy that requires people to spend a lot of time just to keep it running. And I think it's very unlikely that it makes sense for anyone to wait to modernize all that legacy before initiating an AI transformation. What we're seeing with some of our customers that have been dealing with that problem is that bringing a layer on top, a robustness layer on top, like FlowX.AI is, has been also the answer to that. And then being able to modernize in the back those systems and all that infrastructure in a timely fashion.
Ioan, we could talk all day about this, such an interesting topic, and thank you so much talking about AI adoption, agentic, and tackling those legacy systems and considering layering. So thank you so much.
Thank you as well. It was a pleasure to be here.